Hi, and thank you very much for providing us with this opportunity to talk to you about the IFRS for SMEs Accounting Standard. And this is a really exciting time to be talking about the SMEs Accounting Standard because we're just about to start the final phase of our second comprehensive review of the standard. So what I'll do this morning is, if we move on to the next slide, I'll provide an overview and a bit of history about this standard, have a look at where it is applied across the globe. Then I'll talk to you about the second comprehensive review. And finally, I'll talk particularly about some of the feedback we had when we were doing the research for the proposals that are in the exposure draft. So let me start, if we move forward, if we could have the next slide. And the next one, I'll start with this history of the SME standard. So the SME standard, the best thing about it is it's really small. It doesn't act as a doorstop. It is only the current version is only 250 pages. The proposals make it a little bit longer, but it's still very much shorter than full IFRS. And that makes it much more accessible to SME users. It's particularly tailored. So it's based on the principles from IFRS accounting standards, but it's tailored to the resources and the needs of SMEs and the needs of their users. So it focuses on the information needs of lenders and users of SMEs financial statements. So when we go out and we do outreach on the SME accounting standard, we particularly look for people who lend to SMEs and the information that they will need for SMEs. So if we move to the next slide. So the SME standard was originally issued in 2009. So that was the first edition of the standard. In 2010, the ISB and the IFRS Foundation trustees formed what we call the SME Implementation Group. And from our website, you will notice that we've recently appointed some new members to this group. And this group helps us in developing the proposals. So it helps to advise the board. So when we are looking for members for this group, we're looking for people that have experience with working with SMEs, are SMEs, or are lending to SMEs. In 2012, we started the first comprehensive review. And then in 2015, we issued some very limited amendments to the first edition of the standard. And really, in those amendments, we were responding to feedback on the first edition because the board prioritised stability of the standard over updating the standard for recent developments in IFRS, which meant when we started the second comprehensive review in 2019, we had quite a backlog of standards to look at whether we should update for. And I'll go into that a little bit later. But if we move on, I'll talk about who the board develops the standard for. So if we could move to the next slide. So I think you've just been talking about full IFRS. So that full IFRS is designed for entities that have public accountability. So those will be entities that are listed. They are, major banks. The SMEs standard is designed for those entities that don't have public accountability, but do produce general purpose financial statements. And then under that, in that final layer, we have no requirements for IFRS, no requirements for general purpose financial statements. So let me just talk about the objective and the scope of the standard if we move to the next slide. So when the board set about developing the IFRS for SMEs accounting standard, it had in mind that it wanted to have a standalone, simplified set of accounting principles for entities that don't have public accountability. Now, what the board has done is used public accountability as its scope criteria for the standard. So when we say doesn't have public accountability, we're referring to SMEs. And what the board said was normally an SME will typically have less complex transactions. than an entity that has public accountability. And probably one of the most important things it said was an SME will probably have limited resources. It doesn't have the resources to apply full IFRS. And actually comparability with its listed peers or its global peers is not such an important consideration when it's developing its financial statements. So with that objective in mind, the board spent a long time and it scoped out the standard to say the scope is for entities that don't have that public accountability, that publish general purpose financial statements. Now, in some instances, in many jurisdictions, you've got to develop a financial framework that works for your jurisdiction. And I think if you look at our jurisdiction profiles, you will see that most jurisdictions have got slightly different frameworks. So where they say the application of full IFRS is appropriate is different from the next jurisdiction. So quite often we may see that jurisdictions adopt the IFRS for SMEs Accounting Standard, but they put size criteria in place. So they say our very big companies, actually, we want them to apply full IFRS, or we want entities, even though they're SMEs, but undertake a particularly important activity, we want those to apply full IFRS. So what's important is that ultimately the choice around the framework is that for yourself, your regulators and your legislative authorities. But the IFRS for SMEs standard is there. So if we move to the next slide, we can talk about the adoption of the standard. So as you will see, the standard is used particularly in Africa, and then it's spread more over Asia. And that little blue dot, the UK, that is where in a previous role before I joined the IFRS Foundation, we adopted the IFRS for SMEs into what is called New UK GAAP. So we have a number of jurisdictions at the moment that are talking about adoption, but at the moment we think adoption of the next version of the standard would be the right step. So let's move forward and I'll talk through how the board updates and develops the standards. If we move to the next slide. So one of the most important things about the SME standard is that it's only updated periodically. So it's normally updated 2 years after the last review, or we start the review 2 years after the last review has become effective. So in actual fact, we issued the second edition of the standard in 2015, and in 2019 we started the review that we're currently working through. Now, because the board had prioritised stability in the first review, as I said, when we started the second review, there were a backlog of standards that had been issued in full IFRS that the SME standard hadn't been updated for. And so there was quite a lot of discussion at the board about, well, do we need to update the standard? If it's working, why don't we leave it as it is? Whereas other board members had strong views. Look, this is a simplified IFRS standard and we should just get on and align. So we needed a framework and a structure for the board to have discussions about how it should update the standard. So without doubt, most board members agreed it needed to be based on IFRS principles, but somehow we needed to be able to work through how and when the board would update the standard. So with those two approaches in mind, if we move to the next slide, we came up with what we call the alignment principles. Now, there are 3 alignment principles, and they are really 3 steps that the board goes through in deciding whether and how to amend the SME standard. So first of all, it says, is this relevant to SMEs? So we've updated IFRS standards, we've made an amendment to IFRS standards, but is that really relevant to SMEs? Would it make a difference to the decisions that users of SME financial statements make? And it's only if it says yes to that question that we move on to the next 2 questions. Because if the answer is yes, the board then goes back to the point that SMEs have less resources than the entities that apply full IFRS, and it tries to make appropriate simplifications. Having made the simplifications, what the board does is say, do we still get a faithful outcome? Is the outcome still going to provide useful information? Now, when we started the second comprehensive review, we published a request for information, and we actually asked people, do you agree this is the correct way for the board to be thinking about how to update the standard? And generally people came back and said, yes, they supported this approach. They thought it was a robust approach for the board to go through, but we hadn't explicitly mentioned cost and benefits. So we added on, we'll do all of that. We'll answer those 3 questions, and we'll make sure we focus on costs and benefits as well. So if we look at the next slide, this is the feedback that we got when we undertook the RFI. So when the board does a comprehensive review, which is, like, as I said, is just periodically, it normally issues it does some research, it talks to people that use the standard, we talk to the SME implementation group, we look at the standards, and then we issue a request for information. So we say to people, these are what we're thinking about, what do you think? So the board did, in this request, in this second comprehensive review, the board particularly said, this is the approach we're thinking about, what do you think? And in the board actually was reaching out to SMEs is much more difficult to reaching out to users of full IFRS standards. So what we did was we had the normal comment letter process where the request for information is made available on our website. You can write a comment letter and upload it to our website. But in this instance, we also tried to use an online survey. So there was a survey available where people could just go in and answer questions. And we also did a number of outreach events, similar to the event I'm doing today, sometimes smaller events. And from all of that work we did in trying to get feedback and to understand where people were, most respondents expressed support for continuing to base the standard on full IFRS accounting standards, but using these principles. We then spoke to our SME advisory group. We presented all of the summaries to the SME advisory group, and they advised the board to continue to base the SME standard on full IFRS accounting standards, but using these alignment principles as a robust framework for working through the standards. So if I move to the next slide and talk about the extent of alignment. Now, I think the important thing I have to say about alignment is alignment doesn't mean that you will end up with alignment. It actually is more of the process you go through to work through whether you should update the IFRS for SMEs Accounting Standard. And in the request for information that we issued as part of this comprehensive review, we did say, how far should alignment go? Should we just align the principles? Should we have the principles and important definitions aligned? Or should we have the principles, definitions, and the words from the standards? What we got back was strong support for the alignment of the principles and important definitions, but not the precision around the language, which is pretty much where the SME standard was when it was issued in 2009 and when it was updated in 2015. So what we got back was, yes, we think those alignment principles give the board a strong way of working through whether and how to align. And then what you align is the principles and important definitions. We went back to our advisory group and asked our advisory group what they thought about the feedback. They agreed with the feedback. And that was the approach that the board has taken in developing the next step, which is its exposure draft. So if we could move to the next slide. So In each comprehensive review, the board publishes a request for information, says to people, this is what we're thinking about updating the SME standard for, what do you think? Then it publishes an exposure draft. Having done all the work on the request for information, we then summarize that work and brought together the proposals that are in an exposure draft. And the board published an exposure draft of proposed amendments to the SME standard. That exposure draft is now closed for comment, and at this moment my team are putting together all of the feedback, and we will report back to the ISB in June about what we've heard about those proposals. What I'll do now is just give you an overview of the proposals that are in the exposure draft, and I'll try and identify some of the big feedback pictures that we've had. So in terms of the standards that the ISB had updated since 2009, the SME standard hadn't been updated for. On this slide, these are the standards where the board has gone through that alignment process and is recommending some, or is proposing some changes to the SME standard. And the first one is a conceptual framework. So the conceptual framework is the framework the board uses to develop accounting standards. So if you're ever reading a board paper that we've issued, we'll talk about our principles for recognition, our principles for measurement, and all of those principles come from the conceptual framework. The 2009, the first edition of the SME standard was based on the conceptual framework the board had in issue at that stage, but actually the board had issued a new conceptual framework. And the discussion was, do we update the SME standard, which section 2 includes the SME version of the conceptual framework? And the board said, yes, we do, because as we move forward, if we haven't got consistent frameworks between the two, then it will be very difficult to update the standard. Generally, we've had support for updating that section. Looking at some of the standards that the board is proposing amendments to, IFRS 3 had originally, the SME standard was based on the first edition of IFRS 3, and it needed to be updated. We've brought in a revised definition of a business. Now, the reason we did that was because when the board did its post-implementation review of IFRS 3, people said the definition of business is really hard to apply. So the board sought to simplify the definition in full IFRS, and we felt it was important that users of SMEs had access to that simplification. IFRS 15 had been issued since the second comprehensive review, since the first comprehensive review. What we've done with IFRS 15 is to work with preparers and auditors of smaller SMEs and try to simplify IFRS 15. We've had overall quite positive feedback about what we've done. We took in IFRS 15, there's a 5-step model for recognizing revenue. We've focused the requirements around that model. And at the moment, we are undertaking some field testing. So one of the important feedback points that we got on the RFI and the proposals was make sure these work for SMEs. And at the moment, the team are working through some field studies that they have done with SME preparers. IFRS 13 is about fair value measurement. Now, the SME standard already had fair value measurement in it. So by making proposals to update the standard for IFRS 13, we were not introducing new requirements. We were just saying, actually, there are requirements in 1 or 2 places in the SME standard. What we're going to do is to bring the guidance on how to apply and measure fair value into one place. So we've created a new chapter. We've brought some of the materials from IFRS 13 into that chapter, and we have aligned the definition. I think generally we've had quite positive feedback. Now, IFRS 10 is consolidation and IFRS 11 is joint arrangements. IFRS 10 had been issued since the board had issued the standard in 2009, but it hadn't been updated in the first comprehensive review because IFRS 10 and 11 were actually quite new at that stage, and the board wanted to wait and see what feedback it got from the post-implementation reviews. We were quite fortunate because at the time we were drafting the proposals in the exposure draft, we had access to the post-implementation review feedback from IFRS 10 and IFRS 11. So we were able to use that feedback to help us develop the proposals that are in the exposure draft. For IFRS 10, the feedback on the post-implementation review was generally the single control model works well. Where it is more challenging is where you have more complicated structures. So actually what the board decided was it would be better to update and move to the single model of control for determining whether you had control of another entity. At the moment, the SMEs has two models. So what the board is proposing is to remove the second model and just move to a control model. So we've brought in some of the guidance that is in IFRS 10. I think we need to look at the level of guidance we've brought in. That's what the feedback, the initial feedback is telling us. And then we've also left in a significant simplification. So there's a simplification in the SME standard that says, if you own more than 50%, there is an assumption that you have control. You can rebut that assumption, but that assumption is there. Now, some people say, well, it's not pure, it's not consistent with the IFRS 10 model, but it's a simplification for SMEs. And what we have to remember is that simplifications quite often remove the purity of the concepts in IFRS, but they work well for SMEs. IFRS 11, the board, again, we could use the findings from the post-implementation review, which were overall supportive of the approach. There had been some problems in bedding down IFRS 11 initially, but the standard was now working well following the guidance that the board had subsequently issued. So we moved forward with aligning with IFRS 11, but what we proposed in the exposure draft was, although we would align the definition of joint control, we would keep three classifications for joint arrangements, whereas the full IFRS only has two classifications. And that was because it was felt the three classifications were simpler to apply. I think we've had a bit of mixed feedback. We'll have to work through that proposal. That I think is going to be one of the more challenging areas for us to work through in this final stage of the comprehensive review. Let me just. And then IFRS, I think the last hexagon on the slide is IFRS 9. Now, IFRS 9, as soon as I say the words, people think SMEs can't do IFRS 9. I know exactly what's going through everyone's head. But what we did was we worked through each of the topics in IFRS 9 to decide whether to align or not. So if we look at classification and measurement, the SME standard says these types of financial instruments are measured at amortized cost, and then the others. So it didn't have a principle, it worked on a basis of examples. The feedback that we had got when we were developing the request for information was, actually there are instances when it's difficult to see whether the financial instrument we've got fits into each of those examples. So to respond to that feedback, we introduced a new principle. But you only need to use that principle if you can't use the examples. So my view would be, although we're borrowing a principle from full IFRS, we're actually responding to feedback that we need to make the SME standard easier to apply. Then we looked at the measurement, and particularly around the expected credit loss, because this was a significant improvement that had been introduced in IFRS 9. Now, what we felt quite strongly about, and I know my team particularly felt strongly about it, was, the expected credit loss model is quite a difficult model. And we had quite a lot of discussions with the board about what we should propose. And what we did was we tried to say, how relevant is an expected credit loss model to entities that apply the SME standard? And what we felt was, well, entities that are applying the SME standard generally will have more simple financial instruments. They'll have trade receivables. We were still in two minds, and in the end, in the exposure draft, we decided to propose that for those simple financial instruments, and would use the simplified expected credit loss model that was in IFRS 9. So based on the simplified model in IFRS 9, we made the proposal. There's quite a lot of feedback on this proposal, and we'll work through that very carefully with the board and our advisory group over the next year. We didn't change the requirements for hedge accounting. We looked at those and we decided they worked well in practice and there was no need to amend them. And what we did propose to do is to remove the option. Now, you'll remember at the beginning of the presentation, I said the board wanted a standalone document, but the area where they didn't have a standalone document, there was a reference back to full IFRS, was for IFRS 39, was for IS 39. We're proposing to take that option away because we've now worked through IFRS 9. The other area where we needed to address was issued financial guarantee contracts. Now, the SME implementation group had already received a question about how to apply the SME standard to issued financial guarantee contracts. And so we were compelled to try and bring forward that guidance that was in an application note into the standard. We've made some proposals in the standard. They are linked to the expected credit loss model, so we will need to look at those proposals when we have got a way forward on the expected credit loss model. We've had quite a lot of feedback about them, so there'll be another area that we work through. Okay, so if we move on to the next slide, there are two areas where the board went through the alignment approach and it decided when it got to the end of the relevance discussions, it would not make proposals to update the standard. Those two standards are IFRS 14 and IFRS 16. The discussion on IFRS 14 was quite simple for the board. It has a project. Currently, it is reconsidering or it is considering the feedback on an exposure draft to update IFRS 14. It didn't want to update the SME standard now and then be required to update the SME standard in a future comprehensive review. Consequently, the board is not proposing to make changes. The second area, which was being slightly more complex, was IFRS 16, the leases standard. Now, the SME standard is based on the old model for leases and does require the recognition and measurement of some leases. IFRS 16 was a new standard. The board has not yet started the post-implementation review. And overall, the board felt that it wouldn't, at this point in time, update the SME standard for leases. Now, some of that was because the standard is quite new. It's still being embedded in full IFRS. There have been challenges with embedding the requirements in full IFRS, and the board felt very much it should wait. And also there was some feedback from users of SMEs financial statements. Now, as I said, when we design the SMEs, we think we have the users of SMEs financial statements, so the bank lenders, in mind primarily. And what bank lenders said to us was, we really need information about cash flows. We can't securitize lease assets or the right of use assets for leases. So what's important is that we understand the cash flows. So given the feedback the board got in the exposure draft, the board did not propose to update the standard. It merely proposed to ask for feedback on the costs and benefits of aligning with IFRS 16. So that is an overview of where the proposals in the exposure draft. I'm just going to run through some of the feedback that we got when we did some specific outreach to preparers. So if we could move on to the next slide. So after we had got the feedback on the request for reviews, what the board said to us was, yes, you've got lots of feedback. We're a bit concerned you haven't got quite enough members, quite enough feedback from people that are actually applying the standard. So could you go out and do some interviews with preparers? So with the help of our SMEs members and from doing some social media posts, we identified a number of preparers, and we interviewed those preparers just to give us some extra feedback. So if we could move on to the next slide, there were 18 interviews with preparers from 8 jurisdictions applying the standard. And we really wanted to gather an insight that would help us develop the proposals in the exposure draft, so to help develop and update the IFRS for SMEs. So we asked questions about experience of applying the standard and topics that are not necessarily in the standard. And then we wanted to understand whether the SMEs did its job. So we asked preparers what information they were sometimes requested. This enabled us to understand a little bit more about the relationship between preparers and their lenders. So if we move to the next slide, this was the big overriding messages that we got from preparers. The SME standard needed to be kept simple. It needed to be suitable for those entities that are SMEs and have those fewer resources. So that was a key point that we heard. We heard that SMEs particularly like not having the substantial disclosures that are in IFRS, and that the disclosures are reduced to reflect the needs of SMEs lenders. And the other thing we heard about the SMEs that was particularly important was that they appreciate the stable platform. So those of you that follow IFRS accounting standards will see that IFRS accounting standards respond to feedback and they are updated regularly. Whereas the SME standard, we only update periodically. And that was very important for SMEs not to be going through that constant need to learn new standards. So if we move forward, we asked, if we move to the next slide. Could we move to the next slide? Right. So we wanted to ask about our principles with preparers, make sure again that we've got those principles right. We heard on relevance, make sure that there are benefits to SMEs, not that it's just relevant, but it benefits SMEs. So it would make a difference to users. The simplicity, take into account the resources of SMEs. And then what we did here was something around timeliness, which was the benefits of a single financial reporting framework. And I'm just going to reflect on some conversations that we had at a global meeting of national standard setters, where we discussed with we had a panel discussing with some of the national standard setters the benefits of having full IFRS and the IFRS for SMEs. And that was around this single framework for financial reporting. Because the principles in the SMEs are the same as the principles in full IFRS, it means it's much easier to train accountants. It means accountants can move from large firms to smaller firms. And it means that lenders understand the principles between the two standards. So this was an important consideration that we heard from those that prepare SMEs financial statements. So if we could move to the next slide, we talked about some of the challenges in preparing SMEs financial statements. These were some of the challenges that we heard, resources and knowledge of accounting standards. This was a significant cost to SMEs. We needed to be mindful of this. Disclosures can be a big challenge, so it's important that we think about disclosures. And one thing we heard was about small preparers that prepare financial statements on behalf of their clients. And this week we talked to one of the leading software suppliers for SME financial statements to make sure as a team we understand how SMEs are putting their financial statements together, so that when we're making proposals or when we're in this final stage, we understand the management of data between a SME and its auditor or its preparer of financial statements. Some of the areas SMEs identified as being particularly challenging were the impairment tests because of obtaining forward-looking information, finance lease accounting, and some areas around government grants. And I think that was particularly impacted by COVID at that time. So big message again was on making sure disclosures are fit for purpose. So if we could move forward. These are some of the things that SME preparers told us about the IFRS for SMEs. That point around having a consistent framework was important. It's helpful that the SMEs is a very short document. And this was something I remember hearing when we were moving from in the UK, when we were moving to the IFRS for SMEs. And I was talking to some SMEs and they said, you know, if you've got that much of books to go through, you're more tempted to pick up the phone and ask your auditor a question, as opposed to now I've got this small SME book, I'm actually more inclined to pick up the book and try and answer the question up myself. So that accessibility point is really important for SMEs. So if we could move forward to the next slide. The next slide talks about that question I asked. Are there topics in the SME standard that you think we should address? Generally, SMEs have said the requirements were helpful. It was the standard stood alone. There wasn't particular matters that were of an issue. We did also hear, you know, sometimes if we do get difficult questions, we can refer to full IFRS, and that's very helpful. So that consistent application, that consistent framework came in there as well. And then some of the other comments that we heard are on the next slide. So if we could just move forward. If we could move to the next slide. So one thing we heard was there's a lot of S's in the SME standard, and sometimes there are micro entities. So there is currently on the IFRS Foundation's website a guide for micro entities, and that guide simply draws on the IFRS for SMEs standard. But we do know that many jurisdictions have got those three steps, those three groups of entities that apply IFRS, then the SME standard, and then many entities have got something different for micro entities, and that might be based upon cash accounting or something. It is very difficult when we are developing and updating the SME standard to get that balance between the smaller SMEs and the more larger SMEs, and particularly around the subsidiaries. So you may be aware that next week the board will have a supplementary board meeting, because we've been asked by entities that are subsidiaries of very large companies that apply but use the IFRS for SME standard because they are SMEs,